Welcome to Witham Sounding Board, a podcast sharing powerful business tips, insights, and trends for those seeking to become a rock star in their industry.
Good day and welcome to Witham's Lodging Insights and Innovations podcast. My name is Lena Combs. I'm a partner here at Witham and practice leader of the firm's hospitality services team. Today I have with me Joey Masters, who's a senior partner and national hospitality practice leader at Baldwin Group, specializing in insurance for the hotel and lodging industry. Baldwin Group is a company specializing in risk management, insurance, employee benefits, and wealth management advisory services. Today we'll be talking about the current insurance landscape for hospitality companies and tips on navigating the complexities and rising costs. Thank you, Joey, for being here with me today.
It's a pleasure, Lena.
Great. Well, let's jump right in.
Let's do it.
So, Joey, in recent years, how has the hotel and lodging industry been affected by the rising costs of insurance?
Oh, gosh. Negatively, materially, right? Insurance costs for the lodging sector have gone up exponentially over, let's call it, the past 5 years. Starting really back in 2020, pricing has been on a steady climb up. 1 year it's property, 1 year it's liability. But as we break it down, let's say from a hotel by hotel standpoint, each location's probably looking at least 2 to 3x in insurance costs what they were about 5 years ago. 2020 to 2023, the main focus was on the rising costs of property insurance. And now as we got through 2024 and navigating 2025, the crux of the problem is really the liability insurance. And unfortunately for the sector, it feels like it's always something. It's always something that is causing an issue and causing a massive rise in fixed expenses for the hotel and lodging sector entirely. It's been difficult. It's been a lot to navigate. And unfortunately, I don't think that hotels across the country have had the luxury of just adding or multiplying their room rates by 2 or 3% either, right? So they've had to get tricky. They've had to find new solutions to help navigate this. It's been a tough problem. It has been industry-wide. Certain locations or geographies have been affected more than others, but it's certainly an issue across the United States.
Yeah, we're definitely seeing some impacts on profitability, both from the increase in insurance costs and other factors that have cropped up in the last 3 to 5 years. So
yes, I'm sure your team is witnessing the financial component year over year with your clients. Right.
So how do insurance requirements issued by the brands impact profitability?
It's a necessary evil, those brand requirements, right? It's a bit of a double-edged sword. The brands have a duty to protect themselves and candidly to protect the operators as well. They do have a fairly robust list of requirements that they require these operators to procure, right? And it becomes very expensive. I think left to their own vices, operators, owners would probably purchase less adequate insurance, maybe less limit in certain places. However, the brands are pushing certain standards, right? So you think about just Marriott, you think about Hilton, you think about Choice. Everyone has their own set of requirements, and they do differ. But it can be very costly to meet the requirements of, let's say, Marriott's umbrella requirements. Or the intricacies of the business income requirements that come from Choice. However, for the most part, they are applicable and they are useful. With that said, these brand requirements are more boilerplate, right? They're meant for the masses, and in certain situations, they can be negotiated. I think the brands have done a very good job over the past couple of years at giving some flexibility where flexibility is due, and that's not in every situation. But there's often times where we're meeting with clients and we're trying to meet these brand requirements, and sometimes we feel that we have the opportunity to negotiate them down. Sometimes we win, and sometimes we don't. I have felt that the brands have been more than fair over the past couple of years. Again, just giving some flexibility and being human about it, right? checking all the boxes is one thing, but they have been very open to sitting down and having a conversation and listening to some of our clients plead their case. And again, sometimes we win and sometimes we don't. But it's definitely been a fruitful exercise over the past couple of years to at least try and negotiate the right requirements for each portfolio.
So if you don't ask, the answer is already no, right?
Exactly.
May as well ask.
Exactly.
Yeah. So is insurance becoming a differentiator in the lodging sector? And if so, how?
Oh, absolutely. We're seeing hotels switch management companies simply out of each company's ability to get better insurance pricing. We actually witnessed a massive resort move management companies because the new management company was able to lower their insurance costs year over year by about 60, 70%, right? That's a big number. That's hundreds of thousands of dollars in profitability that was previously going out the door. Even though that resort had a great relationship and a long-standing relationship with the management company, they had to do what they had to do, right? There's a fiduciary responsibility for their investors and their stakeholders, and we've seen that time and time again. We are seeing owner-operators moving to the management arena, sometimes against their own will, but the math is mathing for them, right? It's they can take on a management fee due to the delta that they've received in insurance pricing and other efficiencies that management companies are bringing to the table. But more and more we hear that the insurance pricing is a big differentiator. We're seeing management companies compete on insurance pricing. And unfortunately, it's the little guys that are getting left out, right? It's the owner operators. It's those who have one or two locations. They don't have the size and the scale to compete with the pricing that some of the big boys are getting, right? When you're paying $500 a door for insurance and your competitors are paying $200 a door for insurance, it's a big deal. And it's something that I think that people who even wanted to stay away from management companies are just being forced to move in that direction.
Yeah. So what is the current state of the insurance market for hotels? And if appropriate, as part of that answer, why such the increase in the liability insurance portion?
So right now, as we look over the past couple of years and look into the next few years, right? So going back to 2020, the conversation has been about property. Going into COVID, coming out of COVID, we really saw a hardening market for the property insurance side, most of which is focused down here in the Southeast, a lot of the pain being in Florida, the wind market especially. And, the reality is these carriers are in the business to make money. And year over year, when they're losing 5 to 10%, they have to increase prices and increase prices. We have been pummeled by storms over the past 5 years, and that has really impacted the insurance markets and the reinsurance markets. As we get into 2025, and really it started in Q4 of 2024, liability is the new burden. Over the past 18 months, we had a fairly clean few hurricane seasons, and the property market has been able to recoup. Right now, we're seeing probably 20 to 30% decreases on average for large portfolios in the Southeast on the property side. Unfortunately, we're losing that savings on the back end when it comes to the liability and the umbrella renewals. As we start to think about why this is happening, nuclear verdicts, social inflation, a lot of those buzzwords that many people in the industry continue to hear. But the reality is, and these claims from 2017 to 2022, let's call it, are developing far beyond what anyone budgeted for, both on the operation side and on the underwriting side. So carriers are able to put products out at the right price when their actuaries have a high level of confidence on where the claims are going to come in. And there's a lot of carriers right now with actuarial departments that are saying, we don't know what's going to happen. We don't know how much these are going to settle for. And there are a lot of carriers who are bleeding. Social inflation, the concept of $1 million isn't $1 million anymore, right? These $200,000 slip and falls are turning into $2 million slip and falls. And you got to collect a lot of premium to be able to absorb those types of losses. So while there is a lot of uncertainty in the market right now for how claims will pay out, especially as all these states are navigating new tort reforms, carriers are simply making the decision to pull out of the hospitality industry, right? right? They don't have to support the industry. And because it's unstable right now, they're just saying, hey, we'll come back in a couple of years. That has left, we went from probably 15 carriers that support or want to participate in the hospitality industry, at least in the eastern side of the United States, to maybe half a dozen, right? And that becomes a supply and demand issue. These folks are reeling. They're trying to stay in the business, but they're going to charge accordingly. One of the biggest things that we're seeing right now that's going to impact the hospitality industry is the idea of going from guaranteed cost programs where there's no deductible on liability to large self-insured retention programs. So think about your average 10 to 20 hotel portfolio who for years has been operating with the mindset of we have a claim, we send it to the carrier handles it for us, right? We don't have any deductible liability. We don't have any retention liability on this. There's no money coming out of our pocket outside of our annual insurance procurement cycle. As we move into a self-insured retention environment, it could be the first $100,000 of every single claim is on the management company or the portfolio company or whoever is actually managing the insurance program. And that is going to change or take a massive change in mindset for the entire industry, right? Now that we're absorbing the first $100,000, you're going to see owners and operators and management companies take safety and loss control much more seriously, right? They're going to do everything they can to prevent these claims. They're going to put boots on the ground. They're going to be investing in safety. They're going to be investing in loss control, and they're going to do everything they can to get a handle on these claims. Reality is we're in a cycle, and the next phase of this cycle is the owners and the operators and the management companies are going to take this very seriously. They're going to clean it up. They're going to try to get rid of all the fraud that is going on in the industry. And that, combined with the tort reform changes that we're seeing, 3 to 5 years from now, it's going to be really nice. We're going to go back to those guaranteed cost programs. Pricing will be more efficient. More carriers will come back into the market. But we are entering some painful times. That is for sure.
Let's hope that that's true. Let's hope your crystal ball is clear.
That's right. It's a little foggy sometimes, but hopefully.
Agreed. So what can owners and operators do to lower their costs and ensure they have adequate protection in place?
Right now, I would say it's leaning into the new world of insurance, right? It's leaning into the fact that, hey, we are going to have to be more responsible for our own claims. We are going to have to be more responsible for our own safety and risk mitigation. I think putting controls in place, taking it seriously, not relying on the carrier to just pay these bills for them, I think that's the new future, right? Over the past 3 to 4 years, insurers have been forced to take on more responsibility in the property market, right? They're buying less limit, they're increasing their deductibles, and now it is going to happen on the liability side. So we've seen hoteliers and management companies spend money on fortifying their assets, building better assets from a development standpoint, focusing on concrete construction versus frame construction, just building better, if you will, right? So the physical assets have been fortified and built better over these past couple of years. And as we move forward, we're going to probably see that same concept applied to the operations of the industry. And candidly, take it more seriously, right? Start 6 months in advance. Really understand what's coming up. Ask questions, right? Ask your broker what's going to happen. What are we in for this year, and what can we do to avoid it? You can't do much inside of 30 days, right? You can't make massive changes to operations. You can't put new controls in place. You can't outfit a new hotel with a bunch of safety mechanisms, right? Really understand what's going to move the needle, what's going to make you more attractive in the underwriting process, and then spend time and money investing in that to try to put yourself in a better position, because this isn't a 1-year thing, right? This is going to be a 5-year play. And it may, don't think of it like, I don't want to spend 10 grand to save 15 this year. You're going to spend 10 grand to save 15 every year, right? And those savings are going to compound over time. And right now, from what I hear, every dollar counts in the industry. So, and while, acquisitions are light, development is light, we're waiting on this next financial cycle to happen before we really move forward. Now's a great time to refine operations, right? There's a lot of dry powder sitting out there. Let's take some of that and invest in operations so we have a better foundation to build when that time comes. That's my opinion.
Sage advice.
Thanks.
So what is the best way to find the right broker for a hospitality company? And what are some of the things that hoteliers should look for when they're getting into that cycle?
I think specialization is key, right? If you have more than 5 hotels and you have a portfolio of anything larger than that, you have to work with somebody who really understands hospitality, or who at minimum really understands the geography that you're in. There's a lot of intricacies in the hospitality industry, and especially when it comes to insurance procurement. There's a lot of coverages that are very necessary to have, and if we're not negotiating them into the programs, you can really get left holding the bag. Understanding what that broker brings to the table, making sure that they understand your business, and can support you properly. And I think the size of the broker is also very important. If you own 2 hotels, you should not be working with the biggest broker in the industry, right? And with that said, if you have a 50 location portfolio, you should not be working with a small broker, right? You should not be with a mom and pop shop. If you have 50 hotels, you need to be taking a very sophisticated approach to insurance procurement. If I had to guess, that 50 location portfolio, insurance is going to be a top line item, a top 3 line item for them, right? That is to be taken very seriously. The insurance line item can be the difference of if that company is profitable or not. I also think it's more than procurement, right? It's what is your broker doing for you outside of helping you buy insurance, right? Are they helping you fortify your assets? Are they helping you with safety? Are they showing you loss control tactics? Are they coming out on site to understand why we're having so many slip and falls, right? Are we doing slip testing? Are we putting together reports for the carrier about all the great things that you're doing to prevent more incidents from occurring at your locations? Are you looking at analytics packages every year to understand, hey, where are we seeing slip and falls? Why are we seeing slip and falls? What locations are it happening, right? I think the level of sophistication that your broker brings to the table is going to depend on your size, and you should choose one accordingly. I think it's attention, right? You have to pick the right broker who's going to give you the right amount of attention throughout the year, not just the 90 days leading up to that renewal cycle.
Right, right. So how do different geographical markets for hotel and lodging companies vary, both across the Southeast and then in different states?
So in the Southeast, for example, right now, Florida has passed some very positive tort reform 2 or 3 years ago. We haven't necessarily started to feel the positive effects of that just yet. We're starting to, right? We will see more and more of that over the next couple of years. But right now, for example, Georgia, like you cross the border from Florida to Georgia, everything changes, right? There's a lot of judicial problems in Georgia right now. There's a lot of liability concerns, and it mainly comes from all of these nuclear verdicts that are coming out of Georgia right now. Carriers simply, I don't want to touch it, and they don't have to, right? So that, from Georgia to Alabama or Georgia to Florida, right? You cross that border and the whole game changes. When in reality, whether you're in Savannah or Jacksonville, right? The geographical location from a property perspective really isn't that big of a deal, right? But with the way legalities are right now, the liability differences are dramatic. Mm-hmm. You could have the same exact risk in Florida. You might be paying $1 million a year for liability concerns, and if the same thing in Florida, you might be at $1.5 million, $1.7 million. And I mean, are room rates that much higher in Georgia? No, right? Does Georgia have the ability to raise room rates enough to compensate for all that? Probably not. So it's becoming very difficult in Georgia right now. And then as you move across the country, it's really going to be a state by state, right? What does tort reform look like in each one of those states? For example, California, pretty tough, right? New York City, pretty tough. Midwestern states, not so bad, right? So it really depends on the legal environment more than anything right now.
Okay. So what are the impacts, thinking about Florida, of wind insurance, and what can those of us who live here do to kind of soften the blow?
Sure. It's been a tough couple of years for us.
Yes, it has.
We have seen wind insurance absolutely explode since 2020. With the good news being here in 2025, we are seeing significant decreases. And I think that stemmed from two really good hurricane seasons. So, 2023, the industry was able to charge the highest insurance rates that anyone has ever seen. And candidly, there wasn't any major events that impacted the bottom line. So very profitable year. Going into 2024, it started to moderate. It started to balance itself out. We did have two very large storms, Hurricane Milton and Hurricane Helene. Luckily for the wind insurance industry and the reinsurance industry, those were primary flood events, right? So it was more flood damage than it was wind. So the wind market has been able to recover. Wind pricing we are seeing coming down, but reality is we're one storm away from it going right back up, right? We catch a hurricane, Category 5 hurricane in Miami, we're going right back to it, right? It's going to be bad. With that said, the West Coast has been brutalized over the past couple of years and seems to be the focal point of these storms. But unfortunately, it's more investment in our assets, right? It's fortifying our assets. It's making sure we have impact glass windows. It's building concrete and not frame in Florida. With that said, frame construction up to code in Florida has been performing. Right. But when you're getting into the conversations with the underwriters, they want to see concrete. They want to see superior construction, and they want to see maintenance. Right. They want to see the fact that you're keeping up with your maintenance. You're doing your new roofs when necessary. They want to see all of that. And dollar for dollar, it may not always make sense. Right. Do we need to spend $25,000 on a new roof to save $10,000? Right. But again, don't forget that compounding effect year over year over year. Not to mention, you have a new roof now, right? So the reality is there's less likelihood of actual damage. I would say insurance is a necessary evil. It's not something that we should always rely on to make us whole, right? You do have a deductible no matter what. You are going to have your own responsibilities. And we don't always get dollar for dollar what the damage was back from the insurance companies, right? So responsibly and proactively taking care of our own assets is really the best thing that we can do right now.
It's no different than your body, right?
Exactly.
Just because you have health insurance doesn't mean that you should not take care of yourself.
Exactly. Health insurance is not an anti-aging tactic.
If only it were.
That's right.
Yeah.
That's right.
Well, is there anything else that we didn't cover that you think is important for our listeners to hear today?
I would just say in summary, insurance is tough. It's annoying. It's boring. It's something that we don't want to put our money into, but it is a necessary evil. And the more proactive we are about it, the more time and attention that we give it, the better position that we'll be in. It doesn't have to be a 365-day investment, but I really encourage everyone to take a little bit more time before their renewals. Start 6 months in advance. And that doesn't mean you have to work 6 months on your renewal, but just start to think, what can you do? What investments could I make? Maybe it doesn't make sense, but those investments could also change the course of your renewals for years to come. So I just encourage people to take it seriously, contact the right broker, get in touch, maybe get some different opinions, and really just do the best they can to protect themselves.
Great. Well, that was great information. I could think of a million more questions to ask, but I'm sure we'd probably be here all day. So with that,
we would.
Thank you, Joey, for joining us today and for talking about this timely topic and providing your insights to the lodging industry.
Absolutely. Thank you so much for having me.
If you have any questions about today's podcast, please reach out to us through www.witham.com/hospitality or to Baldwin Group at www.baldwin.com.